Hello traders and welcome to the lesson 2 of our whole webinar trading series for this series, which is the first steps in Forex trading. So today we are going to draw the winner the for the winner for our last or for our previous Q&A session. So you may see your corresponding number together with your name on the description box below. And once the draw hit your number, then that means you are the winner of our draw, and our team will reach out to you and will give you the $100 to your trading account. Okay, so let's just wait for other participants before we draw the numbers. So let's wait maybe around 5 to 10 minutes before we draw the numbers. So hello to everyone who are here with us at the beginning of our webinar. So good morning, good afternoon, and good evening to wherever you are watching today. Please type something in our comment box so that we could greet you. Hello to you as well, Abuzer Market Mogul. Good afternoon, UHUNOREN TV. Hello, Sam Daniel. By the way, don't forget to join our Telegram channel. You may find the link on the description box below. If you want to join the OctaFX Filipino traders, we have a community on Telegram. You will get some updates and some trading education and trading ideas inside our Telegram channel. Hello, Marcos from Nigeria. We're glad to have you here today. Hello, Kevin J. Cabonegro. Hello, Shai Lendra at 99. Hello to you as well. So by the way, please stay tuned again for at the until the end of our webinar today because we will have another Q&A session and I will ask you a question that is related on our topic today and you will have another chance to win the $100 on your live trading account. So for those who participated in the raffle of the last session, note that you can find and compare your OctaFX account number and your number in the upcoming raffle in the description box below. So you may see your name and your corresponding number. So later we will draw the numbers. So for those who don't have a real trading account yet, there's still time to open one. Just sign up on our website and you may use the PaulJM100 promo code. All right, so we may now start the draw. So last time there are 13 right answers or 13 individual who answered the correct answer, who put the correct answer on our comment box. So we will draw the 13 numbers here as you can see. And then what we are going to do is to draw the numbers, the 13 numbers. We will use this number generator or this randomizer. And then once the number pop up in the screen, then that means he or she is the winner. Okay, so let's now start. Again, you will see your corresponding number together with your name on the description box below. Okay, so 5, 4, 3, 2, 1. So there you go, we have a winner. The winner is number 6. And number 6 is Venancio Jr. Arenas. So congratulations. Sir Venancio. So our team will reach out to you, and then we will credit the $100 to your live trading account. Okay, so for those who didn't win, so don't worry, we have another Q&A session later, and you still have a chance to win $100 to your trading account. All right. So again, congratulations to number 6, which is Sir Venancio Jr. Arenas. Hello, Jack Moya. Yes, we are live. All right. So having said that, so we can now start with our lesson 2 for today. So for today's lesson, we are going to talk about the analysis about how to analyze the forex market. What is the fundamental analysis, what is technical analysis, and the sentiment analysis. Okay, so let's now start. So to begin, forex market consists of 3 analyses. So the first one is the sentiment analysis, the second one is the fundamental analysis, and the third one, which I believe is the most requested topic, and this is where most traders are thinking that this is the only thing that they need, which somehow true, and for other traders, it's false. So think of it like sitting on a chair. So if you sit on a chair and if you remove these two, then it will be impossible for you to sit on a single leg, right? So that's why it is important to combine all of these three, where it is very useful for us to find your edge, to find your system, and to be a consistently profitable trader if you combine sentiment, fundamental, and technical analysis. Okay? So think of it like sentiment analysis is the knee-jerk reaction or the initial reaction of the news. It is a form of fundamental analysis, but it is just for good for short term, like the initial reaction for something like, for example, the Philippines release a news and that news turned out to be positive, then the sentiment for that news, or the investors or the market participants will think that that news is good. The sentiment would be bullish, could be bullish, and because of that, we can expect a bullish market out of that news. Okay, while fundamental is good for long term, such as the economical condition of the entire country. All right, and while that is true, then technical analysis is the representation of what's happening between these two. So think of it like fundamental and sentiment analysis is what's really happening around the world. Okay, so this two right here consists of news, consists of GDP, employment rate, geopolitical something something, and etc. And while this is the condition, or while this is the case for fundamental and sentiment analysis, technical analysis is the representation of what's happening between these two. Okay? So while if we have a good news, then technical analysis would show us an uptrend. And if the news is negative, then we could expect a downtrend or a bearish market. Okay, so let's now dive deep into the sentiment analysis. So here, as we can see, sentiment analysis is used to gauge how other traders feel. So just like what I am trying to say earlier, it is like analyzing the overall opinion of the market participants. You are trying to analyze the opinion or the feeling of your or the other traders or the other market participants, whether it's about the overall currency or about a particular currency pair. Okay, so for example, we can see here on our graphic below that we can use a tool like this, right? So as you can see here on the AUN, for example, the sentiment for this one is bullish because bullish is 52%, whereas bearish market, or the traders who are long are 52%, means that they are more than the negative traders or the bearish traders. The bearish traders are only 48%. So in this case, 52% is bullish. So that means the market participants are thinking that the Aussie yen could rise. Okay, some of the traders or some of the market participants are thinking that the Aussie yen will go up because the sentiment for the Aussie yen is bullish. All right, so we can use a tool like that here on this tool. So as we can see, for example, here the euro yen is just 30% bullish, while 70% are thinking that it could go down. Okay, so that means more than any other thing to consider, it is very important to know what the market participants are thinking about the euro yen today. And this is good for a short term effect because this we can combine it with fundamental analysis or with news. So here, for example, the USD released their GDP, whereas the forecast is just 2.6%, but the actual rate turned out to be 2.9%. So because of that, this is a good news. And because of that, the sentiment for the US dollar could be it will be bullish or it could go up because it turned out to be positive, right? So sentiment analysis is something like that. Okay, so going back here on the euro yen, so we can see that the overall feeling of the market participants or the sentiment for of the market participants today is more on bearish side than the bullish side. Okay, so that means a lot of traders and investors are thinking that euro yen will go down. And if we look at it on the live chart, so here as we can see, so again, it is useful to look at the lower time frame, such as the 15-minute time frame, because keep in mind that sentiment analysis is just good for short term, while fundamental analysis is the one that is good for the long term effect of that news. So, for example, GDP came out good, came out positive, then that means it could have a long term effect for that specific currency pair or for that country. Okay, or so going back here for the euro yen, we can see that the sentiment is bearish. Okay, it is 70% bearish and just 30% bullish. So that means a lot of traders and investors are thinking that euro yen may go down. And as we can see here, euro yen is actually making a triangle pattern right here. Okay, so this is how we can combine technical analysis and sentiment analysis. All right, so if that's the case, then you can go with the majority. You can go with 70%, and you can ride the bearish side of the sentiment, which is bearish. So what we can do here, if we are going to take a look at the technical analysis of this euro yen pair, we can see that right now it is on a sideways and it is forming a triangle pattern, right? So if we want to take a short trade, because again, it is the sentiment for this one is bearish. So if we want to go with that, if we want to go with the majority, which is bearish, so what we can do here is to look for a possible breakout from this lower channel. Okay, or we can also wait for a breakout and then a retest for a possible continuation to the downside. Okay, so that's how we can combine sentiment and technical analysis. All right, so to recap, sentiment analysis is like gauging the overall opinion of how traders feel, how other market participants are feeling right now. And then once you saw that the sentiment is bearish, then you can look at the technical analysis and look for price action patterns such as head and shoulders or something like double bottom, double top. And then if the price is going down while sentiment is bearish, then that's a good combination. But if the price is going up while the sentiment is bearish, then that's not a good combination at all. And you may want to avoid trading that pair. Okay, so basically that's how we use sentiment analysis. It is just like gauging how other market participants are feeling right now. So we can use a tool like this, or we can also use something like this, which is the current news, the latest news for the forex market in general. Okay, so like this, for example, so the pound is expecting two forecasts, and the actual rate is -23. And for the euro, they are expecting a 12.4% for their unemployment rate. But unfortunately, the actual result was 12.9%. So you can use this data together with sentiment analysis. So because of higher unemployment rate for the euro, we can expect that, or we can assume that the sentiment for euro would be bearish, right? We can expect that market participants are thinking to take a short entry or a sell entry for the euro currency because the actual data is higher than the forecast for their unemployment rate. Okay, so that's basically that's the use of sentiment analysis. It is like analyzing the market participants' feeling for the current situation. Okay, and to move on, let's now take a look at what fundamental analysis is. So fundamental analysis is a way of looking at the forex market, but by analyzing economic, social, and political forces that may affect currency prices. So we can also use supply and demand in this case. So for example, like what we read here, we can analyze the economic, the social, and political condition of a particular country. And if that country, for example, the Philippines, has a good economy right now, then that means the Philippine peso could go up. Okay, but if the Philippine peso is suffering from a bad economy today, then we can expect a long-term bearish move from the Philippine peso currency. Okay, so something like that. So to understand it better, let's compare it on the stock market. Okay, so stock market is analyzing the company value, the condition of the company. It is called microeconomics, while in forex it is called macroeconomics. So again, it is called macroeconomics because it is the largest market in the world, as we studied last time. Okay, so for example, as we can see here, stock market for you to identify the fundamental side or fundamental condition of the stock, then you should study about their condition, while here in forex market we should study their economic situation, like their GDP, their unemployment rate, and something like that. And if we look at this comparison, we can see that in stocks it is used in evaluation of corporate bonds as well as the overall well-being of the company. So for example, Apple sold more than what they are expecting. So for example, they released the iPhone 14 and they are just expecting to sell at least 100,000 units, but in the actual sale came out to be 200,000 units. instead of just selling 100,000, they sold 200,000. So that's a good news for the company, right? And because of that, we can expect that the sentiment for Apple will go up, and we can see a possible uptrend on the technical analysis side for that specific stock. And we can also analyze the financial statements as well as the projections for a specific company. So, um, like here in the Philippines, for example, a company, a giant company, bought out this small company for their expansion. Then that means that's a good move. Other investors will think that that's a good move because they are trying to expand. They are trying to grow their business. So if you analyze it together with the sentiment analysis, it would be a possible bullish analysis or bullish scenario for that. Okay, because that company is trying to grow. Okay, while in Forex, it is used in the evaluation of currencies, bonds, commodities, and stock indices. So, like what I said earlier, it is the largest market in the world. And because of that, somehow it may affect the stocks. Okay. So, for example, here, as we can see here, it is examining the factors that affect the economy as a whole. So, for example, the growth of a country is suffering from let's say COVID. So, for example, on what's happening on China today, they are still suffering from COVID, right? And because of that, a lot of investors are losing their interest on investing in their country. So that means they are suffering from a huge loss of their demand. The demand is going down while the supply is going up. And because of that, we can expect for their currency to go down. So something like that. So we can also study about the interest rate, the growth, and the unemployment rate. Okay, and we can also use the interest rate. So, for example, a bank raise their interest rates, then the initial reaction for the investors would be to to save or to put their money on the bank, right? So, for example, this is a person who has $100,000, and the bank told him that they will increase their interest rate. So what do you think this person will do? So of course, he will put his money on the bank to have a higher interest rate for its savings. Okay? So basically that's how fundamental analysis is working. We can also we can also use the current news or the latest news about the country. So for example, here in the Philippines, there is a news about the Maharlika Wealth Fund, and a lot of analysts are saying that it is bad, and some of the analysts are saying that it is good for the country. And because of that, there's an imbalance for on what's happening in the Philippines today, and because of that, the Philippine peso is being affected by it. So you can use fundamental analysis like that. You can also use unemployment rate. So just like what we did on the euro earlier, right? So for example, unemployment rate went down, then that's a bad news for that country, and it may affect the economy as a whole. So in that reason, or in that case, the currency for that specific country would go down, and we can expect a downtrend on the chart, right? And but if the unemployment rate of that country goes up, then that means that's good news. A lot of people will have a work, will have a job, and they will have more buying power because they will have a wage or something like that. And because of that, we can expect a lot of people to buy or to spend, and the flow of the currency will also go higher, and because of that we can expect for the price of that currency to go up. Okay, so this is how we can combine fundamental analysis, sentiment analysis together with technical analysis. Okay, so now that we know what is sentiment analysis, it is something like analyzing the overall feeling or opinion of every market participant out there. And we also now understand the importance of fundamental analysis. Like it can be useful to study the economic situation of the currency. We can also use the latest news, use the current trends, and we can also use GDP, interest rate, and something like unemployment rate for us to identify if the market could go up or down. Okay? So again, just to make a quick recap, we can use the evaluation of currencies, bonds, commodities, stock indices. We can examine factors that affect the economy as a whole. So this one right here is huge in fundamental analysis because examining the factors that could affect an economy as a whole is, in general, we can use the example of what happened on this province last 2013 here in the Philippines. So if I'm not mistaken, it is the Typhoon Yolanda, right? So for example, in 2013, you have an apartment. So sorry for my drawing. So for example, you have an apartment and you are asking for your tenants to pay you 5,000 pesos. Okay, but unfortunately, typhoon came up and the typhoon Yolanda destroyed your apartment. It destroyed your house. So if that's the case, then you may be forced to to ask your tenants to just pay you at least 3,000 pesos instead of 5,000, right? So this is how this is the effect of the of something like this. So this is the effect in overall economy as a whole. It can affect the currency. It can affect the economic situation of that country because of bad news, because of something like a disaster or something like that. But if, for example, if you are again renting your apartment, and then let's just say near this place near your house, let's say a giant company opened their mega mall. So let's say there is a new mega mall beside your place or beside your house or near your house. Okay, so that means this is good for you because a lot of people will likely to uh, they will feel to likely to live near this mega mall because it is convenient for them to just walk instead of riding a bus or a jeep, something like that. Because if they are riding a bus to near or to go to a mega mall, it will be costly for them. So that means a lot of people will likely to have an interest on living on your apartment. And because of that, the demand for your apartment will go up. So instead of just asking 5,000 for your tenants, then you can now ask, let's say 7,000 because the demand is rising. Okay, so basically that's how we can use fundamental analysis and the sentiment analysis. We can use the current trends, the latest news, or the economic situation as a whole for that country. Okay, so now that we know what is the meaning of sentiment and fundamental analysis, so let's now study about what is technical analysis. And a lot of traders are thinking that this is what they only need. Like, for example, if I am seeing that the price is going up together with a moving average, if the moving average is sloping upward, then that means I would only look for a buying entry. So a lot of traders are thinking that technical analysis is enough. But unfortunately, somehow it is true, but most of the times it is very important for us to also analyze the fundamental and sentiment analysis aside from technical analysis. Okay? Because what if the price is going up on your chart, but once the price reach this level, then there's a bad news came out, or there's um, something like an unfortunate event that came out. Then instead of taking the fundamental analysis or or trading that news, then you are just taking or thinking to go long on this pair or on this currency because you are just seeing the technical analysis which is going up, right? And because of that, you may suffer a loss because once the news came out, we can expect some investors to sell on the news, and we can expect a drop in this price action. Okay, so that's the importance of thinking about, or that's the importance of analyzing the current events. That's the importance of analyzing the fundamental side of the market before deciding to take a trade. It's just because you are seeing that the market is going up or down, you should consider taking a long or short. You should also consider the sentiment and fundamental analysis behind what's happening on the chart. Okay, so having said that, now let's talk about technical analysis. So it is the framework in which traders study price movement. Okay, so we can study some price action patterns such as the head and shoulders, the double bottom, or the divergence. We can also use RSI, moving average, something like that. It is the theory that a person can look at the historical price movements and determine the current trading conditions and potential price movement. So there's a belief that what happened from the past may also happen in the future. So using technical analysis, we can also expect that if, let's say, this market is going up and this pullback right here went down from this high up to this low, it went down, let's say, 10 pips, then there's also a possibility that the next pullback will also be 10 pips as well. Okay, so this move right here could be replicated with the next pullback, which also have the same number of pips. So that's some traders are using that analysis because they are thinking that the historical price movements will determine the current trading conditions and the potential price movement for that specific currency pair. And someone who uses technical analysis is called a technical analyst. Okay, so we can say that if you are more of a technical trader or a technical analyst, then you can use let's say 30% fundamentals while using 70% technical. So that could work as well. Because for me personally, I am more of a technical analyst as well, or a technical trader, rather than studying a lot of fundamentals. I prefer studying more of the price action and some form of candlestick patterns. Okay, especially if you are a day trader like me. So in my case, I am trading on 1 hour time frame. Then I am jumping down to 15-minute or 5-minute time frame to look for my entry patterns. So because of that, I am only looking at the news or the fundamentals for, let's say, I am combining it with my technical analysis for only 70 and 30%. 70% technicals and 30% fundamentals. Okay, so that could work as well. And the main evidence for using technical analysis is that theoretically, all current market information is reflected in the price. So this is what I am saying earlier. While fundamental and sentiment analysis is what is happening in the real world, then technical analysis is the representation of that happening or of that news. Okay? So let's say, for example, in fundamental analysis, there's good news, or there's a fortunate event happened in in a specific country, then we can expect that the price action will follow that news, will follow that fundamental analysis, and we can expect for the price to go up. And while that is true, we can also assume that if a news came out to be negative, then we can expect a reversal from this uptrend, which is from up to be bearish, from bullish to bearish. Okay? So moving on. So maybe you are thinking what is the importance of technical analysis, especially if you are just beginning to trade. So the importance of technical analysis is the price trends. So of course, we discussed this before. So if the price is going up, then you should only look for buying opportunity. And if the market is going down, then you should only look for a selling opportunity. Okay, so this is the use. This is one of the many advantages of using technical analysis. We can determine trends. We can also spot or determine if the market is going sideways or if it's just consolidating. Then if the market is doing this, then we can just avoid this one, or we can also try to buy at the bottom while selling at the top. That could work as well. And we can also use chart patterns. So chart patterns such as an ABC pattern. So this ABC pattern, I will teach this on our upcoming webinars together with the reversal pattern, something like that. So I will teach that on our upcoming webinar. So stay tuned for that. So chart patterns consists of this 1, 2, 3 pattern. We can also use it as a analysis for a possible reversal, which is a head and shoulder pattern like this. So this is what a head and shoulder looks like, but it is not perfect. Always remember that market isn't perfect. While this is the perfect condition of an head and shoulder pattern, we may also see a movement like this. So this is still considered to be a head and shoulder pattern. Okay? So always remember that market isn't perfect. We can't always expect to see a movement like this because most of the times market are moving like this. So in that, if that's the case, then we should learn how to analyze a trend and how to analyze a pattern, even if the market is doing such thing like this. Okay, so aside from that, we can also use volume and momentum indicators such as the MACD. We can also use CCI. We can also use RSI. So something like that. We can also use oscillators. So we can identify if the market is overbought. So overbought means that if the price is going up, then if the price is sitting right here right now, then we can expect or we can assume that if this one is overbought, then there's a high chance for this to make a pullback. And if the price is oversold, then we can expect that the pullback may end and the uptrend would continue. Okay, the uptrend may continue if the market is oversold right in this area. Then if the market becomes overbought again, then we can expect for the market to make a mean reversion or a retracement. Okay, so that's the use of oscillators. We can also use moving average. So moving average is something like a line like this. So a lot of traders are using moving average as a filter if the price is above the moving average. So let's take a look at the live market. So for this example, here we are on the euro yen. So for this example, we can see that this moving average is below the price. So in this case, this is an uptrend. Okay, and if the price is below the moving average, then this is on a downtrend. All right. So basically, how a lot of traders are using this indicator, which is called moving average. So there's a lot of moving averages such as SMA, EMA, and there's a lot of settings to it. Some traders are using 20 MA, some traders are using 50, some traders are using 100, and a lot of traders are using 200. So the higher the higher your moving average, it is useful, especially if you are a swing trader, especially if you are holding your trades for more than, let's say, 1 week. So let's say you are holding your trades for 5 days up to, let's say, 2 weeks, then you should use 100 moving average. But if you are a day trader, then you can consider using just 20 period moving average. Okay, and aside from all of these things, then I believe this is one of the most important thing to learn in trading, which is support and resistance levels. Because support is the place or an area where the price, if the price reach a support, then we can expect to to see a reversal, or we can expect for the price to go up, while resistance is a level in which we can expect for the price to go down once a resistance is reached. Okay, so it is very important to learn how to look for an important levels of structure such as support and resistance levels on a live market. So if we take a look at the sample data that we have here, so let's take a look at the Euro Aussie. So on its daily time frame, we can see that Euro Aussie has a support right here. Okay, so learning how to look for an important level such as this one, it will be a very useful tool for you to be a consistently profitable trader. Because even if you know how to use moving average like this, we can see that in this case, moving average is useless because it is just moving like this, right? The market or the price is moving like this in the middle of moving average. So in this case, moving average can't be helpful for us. So that's why it is very important to learn how to look for the important levels on the market structure or on the chart. Okay. So in this case, we can see that we have a support right here. So last time I checked, the price is just right here. Then once I saw that the price is pulling back, into this support, then I saw a possible opportunity to take a long trade. And then true enough, we can see that the price reacted into the support. And then the price goes up. We can see that the price goes up to 158.7 pips so far. And as we can see, the price made another retest from this support, from this market structure. Then the price continued to go up to 281.3 pips. Okay, so that's the importance of having a support and resistance on your chart, or that's the importance of learning how to use the market structure on your favor. Okay, so if we are going to analyze this one right now, we can see that the important levels are right below here. So this is the previous low, and the price is now retesting it. And while that's the case, we can see that we have a head and shoulder forming right around this support level. Okay, so we can expect for the Euro Aussie to fall if the price close below the support. So let's say a candle close below the support level. And if a candle form like this, then we can expect for this pair to make a reversal instead of a continuation to the upside. So this is the importance, or this is the use of support and resistance levels. So once you learn how to identify the major levels on your chart, then it will be very beneficial for you to trade and be a consistently profitable trader. Okay? So again, this is the importance of the technical analysis. So the first is the trends. So once you learned how to identify trend, if the price is going up, then you should focus on just looking for a buying opportunity. But if the trend is down, then you should focus on looking for a selling opportunity. You can also use chart patterns such as double bottom or double top. You can also use um, the head and shoulder pattern, just like what we have here. So this is the use of technical analysis. Okay. So while and we can combine this data on this news that we have today. So we can see that the unemployment rate turned out to be bad because the forecast is just 12.4%, but the actual result turned out to be 12.9%. So this is not a good sign for the euro. And combining this fundamental together with the technical analysis, we can see that the price is now forming a head and shoulder pattern, and we can expect for the price to break the support. And if that happened, then we can assume that the price will make a complete turnaround instead of making a continuation. So that's how we can combine the fundamental and technical analysis. Okay, so I hope you are learning so far, and I hope I am able to provide value today. So let me know if you are learning so far. Just type 1 on our comment box. Okay. So going back, so that's how we can use chart patterns. We can also use volume and momentum indicators. So on our upcoming webinars, we are going to talk about a lot of this, and we are going to dive deeper into these topics. Okay. We can also use moving averages and again support resistance oscillators and etc. etc. All right. So to recap, we learned what is the three types of Forex. So the first one is sentiment analysis. Okay, the second one is fundamental analysis, where we can combine the news, the economic factor or the economic situation of the overall country. We can also use GDP, interest rates. We can also use unemployment rate, just like what we did on the euro here. Okay, and we can also use, of course, the most requested topic, which is technical analysis. Okay, so again, this is the three types of analyzing the forex market. Okay, so thanks everyone who commented one. I appreciate it a lot. All right, so we also learned what is sentiment analysis. So it is gauging the overall feeling of the market participants. So we can use something like this, or we can also use uh, a news like this. Okay, and we also learn what is fundamentals, the difference of micro and macroeconomics, and of course the technical analysis and the importance of learning how to use it. Okay, so having said all of those things, let's now move on our Q&A. So you can now ask some question. If you have question, you can put it on our comment box. So Dayo Shoyoye said that if employment goes up, then currency will follow. It will go up as well. And if the unemployment rate goes up, then currency will go down. So that's right because think of it this way. So if uh, employment goes up, if employment rate goes up, then a lot of people uh, have have a job or have an income, and because of that, they will have a buying power, and because of that, the money will flow into the economy, and because the more money is flowing, then the more that currency will have a demand. Okay, and because of that, the currency will likely to go up because a lot of people are um, spending their money. Okay. Hello, Abuzer Market. You can browse our website at OctaFX. There's a lot of data out there where you can use for sentiment analysis and fundamental analysis. Hello, Sam Daniel. Technical analysis is more like patterns and predictions. Somehow that's partly true because technical analysis again is the representation of what's happening in the real world. So if there's a news, if a news turn out to be positive, then we can identify if the market is going up. Then we should look for a higher highs and a higher lows. We should look for a possible entry. We can also use entry candlestick patterns. So think of it like technical analysis is uh, it is useful for reacting on what is currently happening on the market. It is not it is not used to, or it is not to predict, or it is not used to let's say you are being ahead 10 years from now, something like that, because a lot of traders are saying that if you know how to make a technique or how to identify a chart pattern, they are saying that you can be 100% profitable, which is false, right? Because technical analysis is just useful for you to react on what is happening on the current market. Okay, you can use patterns, you can use indicators, and you can also use candlestick patterns. Hello, Jack Moya. Yes, there's a way for you to watch our previous webinar. Just go on our YouTube channel. You may also watch other webinars there. So again, if you haven't done yet, you can join our Telegram channel. You may find the link on the description below. So that channel is dedicated for OctaFX Filipino traders. Okay, any question? Before we proceed on my question? So again, don't forget to put your trading account number, your live account number, together with your answer later. All right, so if you don't have any question, let's now move on my question. So today's question is, what are the three types of analysis in Forex? Again, don't forget to put your live account number together with your answer to be eligible to the draw next Wednesday. Okay, we still have 3 minutes for your answers. So 2 minutes left. All right. So thank you everyone for tuning on us today, for joining us today for our today's webinar. So once again, this is Paul Mendoza, your trading speaker for today. So tune in on us or be with us again on next Wednesday for our next live webinar. Bye.